I think we are in for a a bull market at least for next couple of years, and assumptions being that I think this government will come in place and they will do right things. And I think it depends on the really risk profile of an investor, and whether you want to go into large cap and mid cap. But I do feel that in a bull market, from a percentage return point of view, mid cap smaller companies do give very good returns. So one has to look at high quality companies which are smaller, has a potential to really grow big. And in this environment, I think you will see both large cap and mid caps doing well, but mid cap would tend to outperform. In a bull market, it has happened historically. You can go and check all the bull markets. Secondly, coming to the large caps also, you will see many sectors, if the economy were to grow at 6.5%, growing earnings at anywhere between 18 to 20%, banking being one of them, capital goods being another. And in this, if you just compound 20% per annum without assuming any re-rating, you can make serious money.
Rahul, how should one invest right now? Ultimately, it's all about asset allocation. It's about picking these spots.
I think I agree with him. You have to have a mix of large cap and mid caps, and I think one sector where if you give me 3 years, then construction as a sector and capital goods as a sector can come back really strongly, because once the investment cycle restarts, maybe 1 year down the line, maybe not immediately, I think there are some really strong companies out there with strong capabilities who have been not doing well because there have been no orders.
So should one buy steel companies, cement companies, builders, road companies?
Well, cement is going to be one way to play that, but I don't think you will get that kind of return if you go directly to the capital good companies or the construction companies. So again, you could choose companies which have also bottom up kind of drivers of earnings, like Crompton Greaves. I mean, it's a turnaround story. And you have India doing well, then you could have twin drivers of earnings for something like that. We also like Voltas, as just a few examples of what I'm talking about.
Nilesh, 3 years, 6 months, and 3 months.
So if you have a portfolio of small and mid cap stocks where promoter is decent, where operating leverage is about to kick in, and where you know that they are available at a cheap valuation, if not in earnings terms, at least on a price to book basis, and who are not excessively leveraged. Little leverage is fine, but not excessively leveraged. Out of this portfolio stock over 6 to 3 years, 6 months to 3 years, will you make tons of money? My answer is yes. Surely within the portfolio, 1 or 2 companies may not deliver return, but that loss will be compensated by the performance of other companies. So this is the time to go aggressive into the small and mid cap stocks, and you have to build a portfolio approach there. But I think this is an opportunity.